directors today, and we're delighted to have them with us. So we have Diana McDougall, the regional president of the Low Country, who's been with Coastal Saints since from 2004, and in 2019 became the regional president, and now obviously across the Low Country. And we're delighted to have her with us. Her partner in crime, as I call, because he's from New Jersey like I am, but is our VP Business Development, Carmen Cucinato. He obviously has a long banking career going back to 1984, and I came to the Low Country here in 2022, and now is part of the business development team and is extremely knowledgeable. And please, again, ask questions as you go through. Our agenda is, as it just did, introduction to Coastal State Banks. And Diana, when it's your turn, you could add anything you'd like, obviously what I just said, and we'll be covering deposits and lending. And with that, I'm going to hand it over to Diana. Start the video.
Karen?
Yeah.
Yeah, we're having a hard time.
Oh.
Okay, there we are. Sorry.
There you are. I see you now. Hey.
Sorry about that.
That's
Sorry.
okay. Technology is wonderful, you know?
Right. So thank you, Karen, for that introduction, and good afternoon to all the participants that are on today's call. Carmen and I are glad to be here today to make the presentation on deposit accounts and lending for nonprofits. A little bit about my background there. It was kind of short, and the reason is because I've been in banking all of my life. So if I put down all my years, then you would be like, well, she should be retired by now. So anyway, but I was very fortunate in 2004 when Coastal States Bank opened the doors to form a new bank, that I was asked to come on and be part of their team. So I'm really proud of that. But anyway, and please feel free to ask me questions as we go through the slides. If I don't know the answer, we'll get back with you, but hopefully we're able to answer all of your questions today. So first, we'll just talk about deposit accounts, what basic information. When you go into the bank to open up your account, they're going to ask you for particular documents to open that account. And the reason behind that is, number one, they want to make sure that the company or the nonprofit they're opening the account for, that this is a legal entity. The people that are walking in the bank through the bylaws can actually open the account. So within the incorporated paperwork and the bylaws, it tells the bank a lot about the company. Obviously, you have to have a tax ID number. So you should have already applied for that through the South Carolina to get your tax ID number. And then lastly, that letter of exemption for the IRS. These are relatively easy forms to obtain. If you go out to the South Carolina Code of Law, there is a long, it's a rather lengthy, kind of hard to read document it's called the South Carolina Code of Law for Nonprofits. And it walks you through a lot of the legal side of what is expected for a nonprofit. So for those of you that have not opened your account yet at a particular bank, and you're wondering how to do it, I would highly recommend going out and looking at that document. And then also, of course, attorneys are always happy to help you with any of that. And SCORE, Karen is always happy to help you with that. So that's the first. Next slide, please, Karen. What kind of accounts are available to nonprofits? Well, nonprofits are, really any account that they're looking for is out there available. But what is the best type of account for a nonprofit organization? Small business accounts are normally what we recommend for nonprofits. It depends on the size of your business, and it depends on the size of the nonprofit. If it's a small nonprofit where there's not a lot of checks being written or items clearing those accounts, then maybe a small business account with some interest that's attached to it is best for you. If we get into more larger nonprofits to where they're needing additional services, then we may want you to go to more of a corporate environment. But normally it's a small business account that pays some interest. So, and when I say some interest, Today, interest rates on just regular checking accounts are not very high, but we'll talk in a few minutes on ways to really make your money work for you. And you really need to be thinking about that. When you have other people's money that has been given to you, how can you make it work for you? When you are considering accounts, and if you go out and just type in nonprofit accounts at banks, there's going to be an array of products that pop up, but don't get lost in wow, that's a great account, because you really want to dig deep and make sure what is the minimum balance you're required every day to maintain that account. If you're looking at $2,500 and you only have $500 in the account right off the bat, you may have a service charge of $20 a month, and of course your interest is not going to offset that service charge. So what is the minimum balance required to avoid service charges? How many items can you write a month out of that account? How many deposits can you make? Believe it or not, we'll charge you, we'll look at the items, but also if you're making a lot of deposits and those items end up being over a certain amount, you will see a charge for every item. So these are things that you really need to pay attention to, because you don't want your donations to be eaten away with service charges. So how do we, and again, look to see what is paying interest on some of those small operating / small business accounts. For those companies or nonprofits that have funds that are available to invest, maybe, and when I say invest, not CDs, but funds that are just sitting in a small business account, but you're not using them to operate on a day-to-day basis, I would recommend you opening up a money market account. Money market accounts in today's environment are paying anywhere between 3, 4, sometimes up to 5%, depending on what bank that you're banking with. That way, the funds that you have sitting in that business account, you would want them to sit in the money market account instead, so you can earn interest. Let's let your money work for you. Because it is a money market account, you can always shift it back to that operating account when need be. So real important, if you have the ability to have both of those accounts, that's great. The other thing is, we find that a lot of nonprofits, they have a strategic plan in place. They're looking for, they may have the money to invest long term. So look at CDs, look at what your plan is for the future for your nonprofit. And if you can take those funds and put them in maybe laddered CDs, and what I mean by that is maybe a 3-month, 6-month, 12-month CD. 12-month CDs are ranging anywhere from 5 to 5.5, maybe in intranet CDs are 6%. I'm not going to make any comment on that, because I prefer to deal with banks that I can walk in and find somebody when I need them to talk to. So any questions on that information? All right, Karen?
Yes, there is a question. If we have a program that we're raising money on for just a fundraiser or a capital campaign, should we be opening separate accounts from our operating account?
Yes, you should. You should. So then you can have an operating account. So we would title like your operating account. We would have another account. We would call it fundraising account, capital campaign account, whatever you want to call it, to keep those funds separately. That's a great question.
And then is the bylaws signatures required the same ones? We don't need something separate for that.
That is correct. Now, once you establish the nonprofit and you have all of the necessary documentation, that will go along with any account that you want to open. You don't have to have separate documentation. Now, in your bylaws, it may say, I've seen some nonprofits that will have investment policies in place. And what I mean by that is you can't take fundraised money and put it into the stock market, and that's all in the bylaws of how it was drawn up for the actual nonprofit. But to put it in an operating, a separate account, there's no separate documentation needed for that.
Okay, thank you. Thank you. No other questions, but anyone who is obviously on the call, please, obviously, if you have questions, that's what we're here for. And then we'll just move on.
All right. So there's always a question on who signs the signature card. Again, within the bylaws of the nonprofit, there should be language about who can open up an account, who can sign for the nonprofit, how many signatures are required on the checks, et cetera, et cetera. Internal controls within your own organization are going to what dictates that two signatures on a check. In today's world, checks clear banks electronically. Years and years ago, it would take 3 or 4 or 5 days for a check to clear. They would come in. Today, a check clears within 24 hours. We do not look at every single check that comes in. So within your own internal controls, you can have 2 signature lines on a check if you like, but a bank is only going to require 1 signature for signing of a check. I would highly recommend 2 signatures is a good idea, but at the same time, again, we can't monitor that for you. But how do you monitor it? Well, you monitor it by, if you have a treasurer and then you have a president, maybe both of those individuals have access to online banking. You go in, you look at those checks, you look at them daily, you look to see who's signing those checks. You have to manage, when you have a nonprofit organization or a business, as far as that goes, you have to manage your account on a daily basis. I mean, that's your responsibility to manage those funds and to make sure that the funds are being used appropriately, and who's signing those checks are the authorized people that can sign those checks. Mm-hmm. I know that was one of the questions. So any questions on that? I know that was a question on
the question. Yeah, I mean, I'm glad we brought this up, because one of the issues I see with many of my nonprofits that we mentor is that, they rely on a bookkeeper, so sometimes an external bookkeeper, that while someone signs the checks, there's no one in the nonprofit that sort of looks at the statements and obviously the electronic pictures of the checks to say, did we have 2 signatures on whatever that dollar amount that they required or not? So it's a good point to bring in that they need to have their own internal arrangements as to who's verifying and making sure those checks. Nonprofits by their nature, and I know we have quite a few of them on this call, are very trusting. And yes, that's great until something goes wrong.
Well, and Karen, it's a good point, because what happens is, you're trying to run your nonprofit business and you're probably up to your eyeballs just trying to stay ahead of the game. And a lot of times the banking side of it becomes a headache. I mean, I don't have time to do it, but looking at it and managing it and making sure that those checks are being signed. It's great to have a third-party bookkeeper to do what they need to do for you. A lot of times those third-party bookkeepers would do the payroll for a nonprofit, but it's still your responsibility, and it's your board's responsibility to manage those funds and make sure they are being used appropriately, and that whoever is supposed to be signing is signing for those checks. So yes, and we can, if you go to in online banking, it's really easy. If you've got a small business account and you do online banking, and let's say the treasurer and the president signs, or sometimes they'll let the bookkeeper sign also, we can give sign-ons. Well, most banks, can give sign-ons to all 3 of those individuals. So there's an internal control that everybody knows somebody's looking over the next person's shoulder. Not that you don't trust people, but it's just a good idea.
Mm-hmm. And that leads us to the next slide.
Okay, yeah, so online banking. Online banking, there's a couple of different types of online banking. Again, small business, nonprofits normally just have what they call the small business online banking portal. That portal will give you access to your accounts. It will give you'll be able to go in and click on transactions. You'll be able to view checks. Through that portal, you'll be able to make mobile deposits. So it's sometimes, depending on where you bank and you get checks and you just don't have the time to get to a bank. We give you the ability through mobile banking to take a picture of that check front and back. It's important that whatever the bank requires on the back of that check for it to be endorsed properly, because they will send it back to you or they will not accept it. And the reason for that is you don't want people depositing checks on a mobile app and then walking into a bank and trying to deposit those same checks. So it's important to read the rules on that. So that, and that also saves time. So making deposits through your mobile deposit app is a very easy way to do business. Most banks will give you credit the next day. Depending on the size of the deposit, you may have a 24-hour delay, but they're going to let you know that. So great way to immediately deposit checks through your mobile device. Another a service that's available is remote capture. And this would be for probably larger nonprofits that have a lot of checks coming in and they're sitting with the machine at the desk versus having to snap it on your phone every single check. The remote capture machine is sitting on your desk and you're scanning all of those checks and it immediately goes into your bank account and you get credit for it the next day. So there's any time that you're looking at additional services, please make sure you understand the cost of those services. And it's a convenience for you, but we don't want to be paying too much for those services. And always use the word, I'm a nonprofit, because we love nonprofits. We want nonprofits to be successful. And we really want to work with you guys when it comes to, or any bank will work with you guys when it comes to service charges and fees. So keep that in mind. The other reason to, as I mentioned earlier, look at your balance. You want to look at checks to make sure that that's the check that you wrote. That's the check number. That's the amount. You know, our clients and most business and bank clients that use their online banking on a daily basis have a tendency to catch fraud so much quicker. And the quicker any type of fraud is caught on an account, the quicker we can react and the quicker we can get the money back. So it's important to look at your accounts every day. And again, I understand how busy everybody is, but just set a time every morning to say at 8 o'clock, I'm going to look at my account to see what it looks like.
And just to interject, and sometimes it's just as easy as looking at the sequence number of your check numbers that are clearing.
Yes.
Because that's probably one of the biggest frauds in banking, is all of a sudden you're using checks that begin with the numbers 200 to whatever, and you suddenly see number 400 in there. It's going to make you pause to say, what happened?
Right, exactly. I did mention in here that you can, if depending on what portal you use for online banking, if you're in our more commercial online banking portal, which is for, it's just there's more tools available for you. That would be a bank. I keep saying we, I'm sorry. That particular bank would probably be, you'd be able to do ACH payments through there. You'd be able to do direct deposit through there. You would be able to have a system, what they call positive pay. So as you write checks, it integrates into a system to make sure those are the checks that you're writing. So a lot of extra services available depending on what portal you get for your business. But keep in mind, again, for every service that you get, there's a lot of times there's a service charge that goes behind it. I would also recommend that you get your statements online. Mail fraud is probably one of the most rampant ways for businesses, and the most, I guess, successful way for businesses to have fraud on their account. So having your statements come electronically is a safe way. Also, if you're writing checks, I highly recommend you take and put those in a post office box somewhere versus on your street. Mail fraud, people going up and down and just taking those checks out of your mailboxes. We see it all the time. It's across the country that happens. So again, using a lot of these tools and these suggestions will help protect your money in the long run for you. The next slide, thank you. And these are just some basics, I would say. Reconcile your bank accounts on a monthly basis, whether it be you or your bookkeeper, but make sure those accounts are reconciled on a monthly basis. If you do have a bookkeeper doing it for you, she should be reporting that back to you and showing you that that has reconciled, that everything is in balance. So highly recommend that. Credit cards. I want to talk a little bit about credit cards. When you have a nonprofit, a lot of times you'll have different people that need to purchase different items, different things within the organization. We do offer, you can get credit cards, and we can actually, most banks have a program that you can have the business and then you can have the person that has its own credit card, and you can set limits. You can accept where that credit card can be used as a transaction. So you really have ways to control the credit card that you're giving that individual if you so choose to do so. We also have debit cards, or most banks have debit cards. I personally think debit cards can be a risk, so I recommend credit cards for the most part on purchasing things. And then lastly, I wanted to mention about merchant services. In your line of business, you're doing a lot of fundraising, depending on where you are. A lot of you may be out in the community. You may be setting up in a, at some kind of weekend trade show, things like that. Anyway, being able to accept credit cards is very important. And if you go out online and you can look, there's numerous ways to accept credit cards. Most nonprofits, there's a small fee for it. You'll be able to take what they call either a reader and plug it into your phone and accept that credit card right on the spot. Again, when you're accepting credit cards, like I say, there are fees involved in it, but it's a great way. Most people do not carry cash. Most people do not carry checks. So it's a great way to be able to make that sale immediately. I'm sure most of you have been out to fundraisers over the last year or two, and everybody is doing it through a handheld device. So it's really easy and it's convenient. Those funds get into your account depending on the credit card processor, usually within 24 to 48 hours. So great way to, especially if you're out fundraising. Great way to.
Diana, a question on that. If a current nonprofit does not have a reader right now, can they just get one for that particular event they may be going, or do they have to take it like for the year or whatever as far as the device?
It depends on who they're currently processing with. So they probably already are accepting credit cards. So they need to go back to their credit card processor and see what is available, maybe only at certain events. So there's not an extra charge for them. But normally these readers are pretty inexpensive. And the only time that you are charged is when you actually use the device and you accept the card.
Okay.
I know, look at, Clover is a great credit card processor. So there's a lot of good credit card processors. There are also a lot of bad credit card processors also. So just be aware of what you're getting into.
And do most banks offer this merchant services, or do you have to go to a third party to do this?
Most banks, either they will have their own merchant processor or they will actually have a third party that they endorse. And so they, it's a third party they're endorsing or their own merchant services. And so they're working with the bank. So if there's any issues with the credit card or the system or anything, there's usually a representative at the bank that they actually call versus just a regular company off the street.
Okay, thank you. I'm going to ask you a question on the mobile deposit because that's the next thing on there, and we talked a little bit about this. So if a nonprofit has a storefront in which they either sell or accept credit cards, you mentioned you could do mobile deposit on the smartphone. So an individual would have to load the app for that for the nonprofit in order to do a deposit via their smartphone or tablet.
So that individual would have to be on the signature card, and that individual would have to have access to our online banking.
Okay, so it would only be an individual who is on the signature card that can get the app in order to deposit it on their personal smartphone.
Yes.
Okay, thank you. Thank you for clarifying that. Now, is there anything that, and again, and I'm asking this question, that a nonprofit who has various people working their storefronts that they have as a nonprofit, is there any other device that they could do that could do some type of mobile banking?
Yeah, we could do it. We could set it up probably at the nonprofit level. But then again, you're only going to have one device. You just don't want those devices in everybody's hand. I mean, think about it.
Yeah.
So there's
just thinking of a device that's in that storefront that they have.
Right.
That someone can, whoever's working the storefront, because again, they use volunteers, they're constant. There's a number of people who might do this depending on the hours that they're actually open and selling whatever, they're selling, is that, if that device was just there in the store and whoever's there can just scan the check.
Well, Karen, in that case, we would actually not want to do mobile. We would want to set up some type of device in the store where the credit cards are accepting right there in the store.
Similar to remote
Versus a
capture, but on a
Yes,
smaller
or
level.
was to a merchant machine, really.
Or merchant
You
machine.
want to
Got
do
it.
a merchant
Okay.
machine. Yes.
Okay. Thank
Yes.
you.
Mhm.
Mhm.
Good question.
Okay. So a question on the remote capture, just going on to the next one. As you can imagine, most nonprofits don't have a lot of checks necessarily, except when they might be doing a fundraiser. Is there, again, going back to having a device at their fundraiser, well, people doing a silent auction or obviously some type of thing that people are now, obviously they may be giving credit cards, but they also might be writing a check. Can they have a device just again for an event?
Yes, so they would, and again, this would go through their online banking. This would be, they would do it through their mobile deposit. They would snap the front and the back of the check, and it would go into their account. Now, when you take a check, please keep in mind that it takes, that it's not it's fun immediate funds for you, but there's no guarantee that those funds are good once they reach the other party's bank, obviously. But yes, you could do a mobile deposit right then and there, Karen, and they would get that. That would be fine. You could do that. Or they could collect the checks if there were a lot of them and go the next day and put it into a remote capture machine in their office and run all of those checks. If they didn't want to do it individually.
Okay. Thank
depending
you.
on the fundraiser.
Okay, that's it on the questions.
Good.
Okay.
Good.
Anything else, or are we moving on to Carmen? Oh, we got one more slide.
Oh yes, thank you. I do want to talk about this real quick. So nonprofits, along with business accounts, EINs are covered up to $250,000 of FDIC insurance. A lot of times within your bylaws, there may be language that speaks to the fact that you can't have more than $250,000 at a bank because you want everything insured. Most banks or some banks have other sources or other types of products that they can use that will help insure your deposits up to 100%. So please keep that in mind also, the FDIC insurance. We get that question a lot.
Good. We do have one more question. You spoke about using credit cards over debit cards. When applying for a credit card strictly for a nonprofit business, would you need a personal guarantee or should you have established business credit?
Yeah, I'm going to turn that to Carmen because it depends on how long, numerous factors in there.
Yeah, there are, Karen. So typically, as a general rule, and I say this really from the viewpoint of Coastal States Bank, but I'm assuming most banks are going to fall in line with this as well. Personal guarantees generally are not required. However, if they're stipulated by either a bylaws or a resolution, they may be required, but typically they are not required. And there is a degree of underwriting that is undertaken with credit cards for nonprofits, as actually for profit or nonprofit. But in terms of personal guarantees in general, they are not required for a credit card.
Let me add to that question. So if there is a new nonprofit, in which they're still fundraising, getting their money together, would they be eligible for a credit card, or would they only have the ability to do a debit card on their accounts with the bank?
I mean, I would say it doesn't hurt to apply because they're going to make sure, as we've said earlier, you have all of your documentation in place. They know that you're a valid company or a viable, valid nonprofit company. And a lot of credit card companies, will just give a small $5,000 credit, until over time that you prove yourself.
Okay, thank you. So now we move on to Carmen.
Thank you, Karen. Okay, so my part is a little bit lengthy, but we'll try to move it along. But I think a lot of good, valuable information is included in here. So, but let's start from the beginning. is there a good time or a bad time for my nonprofit to apply for a loan? Simply, obviously, good times are when, a specific need develops, like purchasing a building or equipment, or adding on to an existing building, or taking on new employees. Obviously, that's a great time to consider a loan for your nonprofit. And some things, we have to think about here, or the nonprofit needs to think about. We need to make sure that there's a sound repayment plan. So it has to work. And we also look at capital injection, which basically is how much money can I put into, whatever I'm doing, especially in the case of a building or equipment. And also, do we need to talk about a capital campaign, or think about a capital campaign? And then lastly, to look at any existing debt and how that might factor into now this new request. But typically, there are good times. Conversely, bad times are if your organization's operating at a deficit. Needless to say, not a great time. Taking out additional loans or considering additional loans only makes perpetuates the debt cycle, and typically banks don't look entirely favorably upon that, especially if the cash flow scenarios don't work. So I guess to summarize that, good times are, you're motoring along, you're in a growth mode, the nonprofit is doing well, there's a lot of initiatives that the nonprofit is considering, and it's all about structure. It's all about, a lot of thought behind what's going to happen, and basically consider all of those things when thinking about a loan. So yeah, that's really the good times and bad times for nonprofit for loans. Karen, if you wanted to move to the next slide, thank you. This bank and this Coastal States Bank, and this is pretty much across the board, I would venture to say, for other banks in your particular marketplace, offer a wide variety of various products, for nonprofits for loans. Lines of credit for working capital needs, and I'll just preface what's a working capital need. That's basically the ability for a company to cover its day-to-day operating costs. So like salaries, wages, maintenance, overhead expenses, and those type things. Very important. What is working capital? Well, working capital typically is cash. That's cash on hand. That could be in bank accounts, checking, savings, any other investments that are highly liquid. And of course, the line of credit will help supplement working capital. So, and again, you're drawing it as needed as the company needs funds for working capital. And then typically many lines of credit are interest only. So you're only paying on the amount drawn down on the line. In addition to lines of credit for working capital needs, term loans for equipment, and commercial real estate loans, or otherwise known as CRE loans. We move to the next slide. Thank you. How are these loans structured? As I mentioned, a line of credit really is a supplemental kind of a working capital line. They are revolving generally for terms of 1 year. You borrow from the available line of credit, monthly interest payments on the outstanding balance, typically at a rate of prime. And again, most banks do lend on the prime Wall Street Journal prime rate, plus a margin, and that varies. That could be anywhere from 0.5% to 2 or 3% or higher. And then basically the principal, the amount you draw down on that line, would have to be cleaned up at maturity. So, and many banks have a 30-day cleanup provision that says the balance has to go to zero. In other words, clean it up. Term loans they work a little bit differently. They are for a specific term, generally 3, 4, 5 years, sometimes longer, depending on what's being financed by the borrower cash flow, the strength of the deal, and those type of things are considered. Monthly principal and interest payments, P&I payments, principal and interest, are required on a term loan. And again, term loans typically are used for equipment. Those typically longer term assets, term loans are used. And then lastly, CRE loans or commercial real estate loans generally, and again, this could vary upon banks, but generally have a 20-year amortization. And we typically, again, in most banks, fix the rate for 5 years or so. And then also monthly principal and interest payments on a CRE loan or a mortgage, in other words, are required on that type of loan.
Carmen, there's a question on a line of credit.
Yes.
If a nonprofit relies on its annual fundraiser to obviously get the majority of its money that it uses for operating expenses, but it's getting close, it's before the fundraiser and they're sort of running out of cash. Can they apply for a line of credit to get them through those, let's say, last 3 months of the year before the fundraiser comes in? Would a bank
Yeah.
look at it that way from a payment standpoint?
Yeah, absolutely. And again, that should be part of the kind of the business forecast. And that's something that obviously the lender will want to know, what they have coming down the road in terms of fundraisers or something that's going to inject some cash into the nonprofit. So yes, I would advise nonprofit clients like this who are expecting a fundraiser to occur, within a certain date, to make sure that is expressed to the lender, kind of give that person an idea of what that fundraiser is going to look like. Many nonprofits that we deal with do have that capability. They do something maybe on an annual basis, maybe every May or June or September or whatever. So they kind of have an expectation of what they're typically receiving. And again, that's used in our calculations when we do underwrite the loan. So yes, I would definitely encourage nonprofits to do that.
Okay, thank you.
Okay. So I'm thinking about applying for a loan. What do I need? This is often a question that we see from our nonprofits. And I just kind of use an example, and in the top bullet says, and this is for equipment. So typically we want to see is gain as much information on the equipment as we can. A purchase order or invoice for the equipment, for example, is very helpful to the bank. We also want to know, obviously, we need to have the entity formation paperwork, any bylaws, resolution from the board of trustees or whatever type board you have, meeting minutes, etc. It's kind of like the underlying core of the loan. We'll get into the financial aspect in a minute, but that's basically what we're looking for initially at the request. And then if it's a larger acquisition like a commercial real estate loan, a commercial real estate purchase of a building, want to know what the down payment is. Is there a capital campaign involved? I'll talk a lot about capital campaigns in a little bit. And are there additional tenants? Is the borrower in this case going to lease out parts of that building that they're looking to purchase? Are they looking to lease it to a third party? We need to know a little bit of background about that. And then also what's called a projected rent roll, which is simply an income and expense statement based on proposed leases. So that is whatever the income generated from the leases, and then whatever expenses, operating expenses for the building would entail. And that typically operating expenses on a building might be real estate taxes, insurance, repairs and maintenance, and utilities typically are what we look at. And then also an agreement of sale or letter of intent for the building or property being purchased, if that's available. Many times negotiations are ongoing. Many banks don't have access to that, immediately. It's coming down the road. It's with an attorney, and attorneys reviewing, and so forth and so on. But when available, typically banks do want to see that. And then, and then the other question, which I alluded to earlier, is the borrower the tenant? Are they going to occupy 100% of the building, or are they going to potentially lease out parts of it? So we'll want to know again, who is the other entity? What are those proposed terms if the building is going to be leased out to a third party in addition to the borrower? So we'll want to know that as well. The guarantee question. Do we need to personally guarantee? Typically, the answer is no. However, as the next bullet point indicates, and we've seen this before, and I've seen it with various banks, that personal guarantees actually may be required by the organization. So it will vary on, mostly it is not indicated, but I have seen some that they do require those officers or trustees to personally guarantee. Rare, but it does happen. And then the last bullet point there is the banks obviously will require a duly authorized officer or trustee of the entity to sign loan documents if the loan is approved. That goes without saying. And again, that's why it's important for us to receive, the organization, the formation documents and paperwork and bylaws as to who can do what. Very important for us, so we know who actually is authorized to sign.
So there's a question, Carmen. If I'm
Yes.
a new nonprofit and I have a need to obviously potentially borrow money to get a few programs up and running, so equipment and things I need to get, desks. And obviously I have no cash at this point, or very little. If I have someone who's willing to give a personal guarantee, will you look at that? Do they have to be an officer of the nonprofit or just someone who supports the nonprofit?
I think it would depend. We'd need to look at, and that would be factored in if a third party guarantee is offered. We're going to kind of want to understand to the extent that the guarantor, is willing to guarantee, to really put his or her name, on the dotted line, so to speak, for this entity. What type of relationship is it? So we're going to kind of want to delve into more so the reason why, and not only the financial capability of that guarantor, but kind of get an understanding why they want to do this. We don't typically see that this bank, and I'm not speaking for all banks, so we don't typically see it here, but certainly it would be something that would be considered.
Thank you.
Sure. Okay. Financial information. So it varies here depending on the size of the nonprofit, whether or not the nonprofit has to file a tax return. Typically a Form 990, which is the nonprofit tax return, federal return. This bank likes, if the nonprofit is required to file business tax returns, we want to see on average the last 2 to 3 years. And then additionally, many larger nonprofits, and we deal with a number of them here at this bank, but I would say this holds true for just about any other lender. In addition to the tax returns, many nonprofits are at a level that they also do audited financial statements. That's simply a P&L for the year as well as a balance sheet. And many times they are needed depending on what they do. They're required, again, in their bylaws. There may be some information in that they require audited financial statements. Also, sometimes due to regulation, there is a requirement for that as well. So we'll take that in addition to the tax returns. nonprofits who don't need to file the business tax returns, and I use this with quotes, receipt of quality financial statements. And we have many nonprofits that are not required to file a tax return. But we'll look for a profit and loss statement or statement of revenues or receipts. There's a lot of different names for them, and as well as the balance sheet. And this can be, and again, over the last 2 to 3 years, they can be compilations from accountants or CPAs. QuickBook P&Ls and balance sheets are often accepted for a lot of the smaller nonprofits, as well as a business debt schedule, which gives the bank an idea of what's out there in terms of, current balance, what the monthly payment is, many times what the interest rate is. Just kind of gives the bank, the analyst, an opportunity to see what this entity has in terms of existing financing. So they're basically the core items that we look for, and again, that banks look for when considering a loan request for a nonprofit. Fine. What does the bank look for? See Diana's presentation. Obviously, this bank and many other banks, I'm speaking for us in general, we do like to see, obviously, a deposit relationship. That's important. For this bank, we're all about relationships. So if we're considering a loan request, we'd like to have, the nonprofit bank with us in some form. So that's important. Again, not a prerequisite, but I will tell you, it is. So it's very important. And then obviously the purpose of the loan request has to match the use of the funds. It has to make sense, in other words. We want to see sound management and oversight by the board of trustees or whoever the ruling body is of the nonprofit. And then cash flow to support the proposed and existing debt, if there is any. Also, I want to note, and I made this note and it's not on the slide, if resumes are available for board of trustees or authorized individuals, it kind of sheds light on their background, which assists the bank in many cases. So I think that's a good piece of information. Kind of gives the bank an idea of any, past experience, kind of their level of expertise when overseeing a nonprofit. So we like to see that. And then my last comment is really about and cash flow. And I've used those two words here in various places. And just basically, for those who maybe don't know, cash flow is basically the amount after you pay your operating expenses. And that amount is what a bank looks at to cover the monthly debt obligations, not only the existing ones, but also proposed. So when you see cash flow, just be familiar with that's the amount that a bank looks at after all of the operating expenses are paid on a monthly basis. Okay?
A question, Carmen. If
Yes.
a nonprofit P&L is managed to zero because it uses all its funds for its programs, but it has a healthy deposit relationship, would you look at that deposit relationship rather than the cash flow or the bottom line?
Yeah, absolutely. Again, it's something that this bank, Karen, does consider. Again, it speaks to the importance of the deposit relationship and not only the loan requests, but also the deposits. And in many cases, that's a very important factor. May not be the sole factor in order to receive the loan, but it's something that the bank puts a lot of credit into. Is the breadth of the deposit relationship. So yes, it is something that we look at.
Thank you.
The 5 C's of credit. Most of us out there are familiar with this or with the terminology. Obviously, with lending to nonprofits, the 5 C's of credit, come into bearing. Credit worthiness, capital, what money is going in, and I talked about it on an earlier slide. Cash flow, there are those words again. collateral offered, and character. That speaks to the character of the organization. Again, the people behind it, the trustees, maybe it's history if it's an existing, established nonprofit that we're lending to. And also for new nonprofits, what is the background of those individuals going into this? What's their level of expertise? Is this something that we believe they're going to effectively manage? So those, 5 C's of credit are very important. I wanted to add that slide in there. Okay, next slide. This is just provided in general terms. What other sources are available to nonprofits? SBA loans, a good source. Grants, there are many grants available at various levels, county, state, could be federal grants. So there's a lot of grant money out there for nonprofits. Takes a little bit of research, but there are a lot of places where grants can be found. Many of those don't have to be repaid. They're grants. And then CDFIs, which stand for Community Development Financial Institutions. Those are ones that are typically a little bit smaller in nature. CDFIs are located in most states. So South Carolina has a number of them, but they're available in most states throughout the U.S. And then in South Carolina, we have what's called the South Carolina Community Loan Fund, which again includes nonprofits to look for loans that could include basically what we offer here at Coastal States Bank and many others, term loans and commercial mortgages and so forth. And then also corporate giving or grant programs and crowdfunding sources, just to name a few. I'm sure there are many others, but these are just a couple other sources. In addition to banks that you can, you get funding for your nonprofit.
But another question popped up from one of the
Mhm.
attendees, which is really going back to Diana's presentation. Can you open a nonprofit account with your bank, even if you don't live in the Low Country or coastal region?
Yes, you can, as long as you have the proper documentation to open that account.
Okay, thank you.
So we've had and Karen approached us about a lot of questions revolving around capital campaigns. And I just want to shed a little bit of light on capital campaigns. And again, this is coming from the viewpoint of Coastal States Bank. I would venture to say that this information contained here on these slides is probably fairly generic throughout most banks. But again, this is how we typically look at capital campaigns. The first bullet talks a little bit about having, looking at a capital campaign, and we used a scenario of having 50%. Is 50% required up front? How, is 75%? Is 25% required up front? Generally, with this bank, it can be less than 50%, but at a minimum, we want a 25% commitment with a capital campaign funds into whatever project it is. And then secondly, the next bullet there, does it have to be actual funds raised, or could it be commitments over a certain time frame? And the answer is it can be commitments, but whatever is collected has to equal about 90% of those pledges made. So we don't want to, look at a number and say, well, historically we've been provided numbers and you're falling short of hitting that 90% of pledges. Maybe your nonprofit's reaching 60% of pledges. Now that's something that, obviously a bank is going to consider that. And then typically they run, anywhere that could be, a 1-year campaign. It could be 3, 4, 5 years, depending again on the scope of the project. We do a lot of loans to religious organizations, places of worship, where they might be building a place of worship, and it might be $10 million, for example. Those typically are longer in scope. But we have to make sure that we see that of these pledges made, we want to make sure that at least 90% is being collected. So that's the important part. And I think we touched a little bit on the next bullet about how is debt service handled. Many nonprofits manage their net profit to zero, which is not uncommon. Typically, what's coming in terms of revenues and funding coming in versus expenses typically are a wash. How do we look at that? And then basically as an underwriting guideline, total debt service, and we talked a little bit about debt service earlier as well, should not exceed 35% of total revenue as a guideline. So, and that's somewhat easy to calculate. So if total revenues are $100,000, so 35% of that is $35,000. So debt service on an annual basis should not exceed, 35,000, right? So that's kind of how we look at it, just as an overall guideline. And then unrestricted funds. What are the bank's expectations for unrestricted funds? We have obviously two classes here. We have restricted funds, which are for a certain purpose, and then unrestricted funds kind of gives the nonprofit some flexibility as to how they want to handle that allocation. And just again, this is a general comment. We want to see reasonable trends for cash and investments. We don't want to see super large swings, especially downward swings. And we want to see a little bit of explanation behind both, not only the decreases, which are very important, but also increases. What's going on? Again, it's all about disclosure. It's all about being open and very candid with the loan officer. So we want to, and that's going to be a question that's going to come up once it's in underwriting is what's going on with the steep increases? What's going on with the steep decreases? We need to be able to explain what's going on there. So, and there are a lot of reasons for that, but we need to know what they are. Fine. A few more words on capital campaigns. Another question came up was net profit. We talked about generally zero. However, maintaining healthy cash balances, and again, I think Karen, we asked a question a little bit earlier. It does factor into a lending decision, and I write on there, it depends, but it's among many factors considered during the underwriting request. Again, speaks to the importance of having a full relationship with the bank. It does help. Deposits are very important to most banking institutions. So yes, it does factor in as a cushion to service debt, both on an existing and proposed basis. So again, something that is important and it would be considered. And then lastly, and we talked a little bit about this, personal guarantees. Do they help if a nonprofit doesn't have debt service coverage a bank expects? And again, it depends. However, it's considered part of the underwriting process. So, and again, in general, most banks don't see personal guarantees offered by most nonprofits. However, I'm presuming, and this bank would be the same, that we would consider that as part of the request should debt service coverage be a little bit deficient in terms of where we need to be. So, but again, it's something that is considered. Last screen, I guess, last slide I have. Well, no, two more. If you have any questions, certainly about financing for your nonprofit, you can feel free to call me here at Coastal States Bank. I provided my contact information here. The cell number, I am available via text as well. Office number, do answer that, as well as having voicemail and certainly via email. And again, I would encourage you, if you have a bank other than Coastal States Bank, to reach out if you have any other questions to a commercial loan officer there, or someone who can help you if you have additional questions as well. And key takeaways, obviously, a lot of different lending products available for nonprofits. Most importantly, we need to have a clear picture of how the funds are generated. What is the revenue coming in? What's the expenses? Are they donations, grants? What's coming in? What's coming in terms of revenue? And what other sources of revenues come in? Ticket sales, events, fundraising. We touched about, on this various parts of this presentation. And preparation is a very important component. We need to have, again, depending on the size of the nonprofit, CPA audits are required, tax returns, interim financial statements, bank statements, budgets. These are just some of the things that are major, very important components in structuring a good quality loan presentation, so we can get an approval for your nonprofit. Other than that, I don't have anything else.
Well, thank you, Carmen. Thank you, Diana. And thank you to those. I know we're a few minutes after the hour, but I think the information was extremely valuable. I've been getting questions that I haven't been putting out there, but yes, everyone's going to get this recording and everyone's going to get this presentation. I highly encourage you who are on this call to send this information to, if you have your treasurer or finance committee. I think they would find this invaluable and they could listen to it at their leisure and then ask questions. Obviously, if you have a deposit question, I'm sure you can reach out to Carmen, obviously he'll point you in the right direction to whatever, branch might be available to, or obviously internal person at Coastal States Bank if you have that question. I'll wrap up with a few finishing slides. This is the last of our nonprofit series. This was our list. It was quite extensive this year, and it could only be possible because of Coastal States Bank, who was a huge supporter, and obviously United Way, who's a partner in putting on this workshop series. And we will be doing it again on we also have one more QuickBooks series, which will be talking about reporting and obviously report customization. I would highly encourage you. We'll be doing it again next year. If you have any questions, please sign up for them. We also have another series, which will be wrapping up in November 30th, is a strategic approach to social media. Honestly, I don't care if you're a profit or for-profit. Social media is the way you reach out to either your customers or your donors or your volunteers. So please, again, we'll be doing another social media series. It'll probably every year we do one slightly different. Altamise, who does the series as our agency, is obviously extremely knowledgeable and great. We're wrapping up our veteran series, and next week we have one on personal credit and small business lending, and Bank of America was our sponsor on that one, and they talked about various obviously ways in which veterans have obviously access to both lending and other services. We did an intellectual property protection series. Doug Lineberry, he is, for an attorney, he is extremely funny and knowledgeable. So this is certainly not a bland thing. So on December 7th, we're wrapping this up. And I will say, as was mentioned, if you have any questions, please reach out. We mentor. We're probably one of the chapters of SCORE that actually mentor nonprofits. So going back to the packages being put together, whether it's for a loan or a deposit or questions you have, we have mentors who can help you. So please reach out to SCORE. And we're always looking for volunteers who can obviously support this. I keep telling Diana when she's ready to obviously retire, we're going to recruit her for SCORE. But she doesn't retire. So really, I mean, she's still, but she's a great supporter of us, but hopefully we can get her to join us somewhere along the way, because she won't be bored, that's for sure. And with that, please follow all of us on social media. We have Facebook, Twitter, LinkedIn. Obviously, we're always posting something here at the end of the day. And again, I cannot thank Coastal States Bank enough for not only this particular series, but obviously for their presentation now, which is absolutely invaluable. And we are a resource partner of the SBA. We always have to put this on there. And with that, I thank Carmen, I thank Diana, and I thank all of the attendees for coming. And I appreciate your time at this point. And have a good and enjoy this wonderful, beautiful weather we're having out right now. So thank you all.
Thank you,
Bye,
Thank you.
Karen, and thank you to all
Thank
the
you all.
participants. Thank you. And